Good day, everyone, and welcome to today's webinar, Controlling Rising Construction Costs, Guidelines for CAMS and Association Boards. We're honored to have you join us for this timely and essential conversation about navigating and managing construction costs, a topic that directly impacts community associations, board members, and property professionals across the region. We're joined today by a distinguished panel of speakers who bring valuable insight and experience. Paul Overton, CEO and owner of Overton Construction and Consulting; Ernesto Cuesta, President of the Brickell Homeowners Association; Tyler Spaedt, Vice President at Valley Insurance Services. Thank you to each of our speakers for sharing your knowledge and leadership with us today.
This event is proudly sponsored by Brickell Homeowners Association, Valley Insurance Services, Dynamic Non-Destructive Testing Incorporation, Best Roofing, R&J Plumbing and Backflow Services, ECRS, East Coast Rigging and Scaffolding, Empire Waterproofing and Painting, EGS International, Puro Clean, Sherwin-Williams, Advanced Air Conditioning, Spaedt and Associates.
We're also proud to recognize that this webinar supports the mission of the Broward Partnership Foundation for the Homeless, whose tireless work provides critical resources and support to individuals and families experiencing homelessness. Thank you again for being with us. Let's begin the session.
Okay, so I'm going to go ahead and get started, Sherry. If there's more people, just go ahead and let them in.
All right.
I'd like to welcome you all to our webinar series. This month's episode is Controlling Rising Construction Costs. In terms of what Overton Construction does, we do general contracting, which includes concrete restoration projects. We do projects in Tampa, Jacksonville, and Central Florida that there's a lot of wood frames, so stuck over wood frames. South Florida is primarily going to be concrete restoration, waterproofing, that sort of thing. So that's one component. And then we do structural integrity reserve studies and milestone inspections. And then I'm very involved in the 558 claim process. I work with most of the attorneys that most of you have probably heard of. I do expert consulting work. I do cost of repairs, cost of completion. I perform investigations, attend depositions, mediation support. So, and I also act as owner's representative, which I'm very fond of. So having that broad spectrum of services we provide, I work with construction numbers on a daily basis. And there's, unequivocally, prices are going up, and there's a bunch of reasons why. So today we're going to try to cover most of the reasons why construction costs are rising, and Tyler and Ernesto are going to help me with that. And then we're going to give you some strategies to mitigate those. And I think, at the end of the course material, you're going to find out that there's kind of an underlying theme, and that theme is always, no matter what we're doing when it comes to construction projects, is getting the right team in place, pre-planning, and make sure that you have your consultants and experts, and you do your due diligence. But we'll get into the minutia of that here real soon. First, I want to have Lorraine talk about the Broward Partnership, what they do, how people can help out, and some of your goals that you have this year. So Lorraine, the floor is yours.
Perfect. Thank you so much, Paul. First of all, I'm Lorraine Shem, the Chief Development Officer at Broward Partnership. And I want to first start by thanking Paul and Sherry for inviting me to speak with you here today. You guys have stepped up and supported this organization since you've met us, and so I'm really appreciative of your support. Broward Partnership was founded in '97, and today we're the largest comprehensive homeless service provider in the county. We provide street outreach, 500 beds of emergency shelter support. We have 2 facilities, Central Homeless Assistance Center, which is right off Sides and Avenue, and the North Homeless Assistance Center, which is in Pompano Beach. We have 74 scattered site of support housing, which is partnership that we have with landlords across the county. We also provide an array of supportive services for all the clients that serve. Beside, emergency shelter, we provide meals, 3 square meals every day, even for those that are going out to work. We make sure that instead of spending their money on lunches, we make sure we pack lunches for them to take with them if they go out for work. We provide childcare, Medicare. We have a dental clinic on site. We provide dental care, training for them so that they're either upskill if they want to enhance their training, or if they're not skilled, provide those training, and that's through partnerships. And then on top of that, we have employment assistance to get them employed. For them to move out of our shelter into housing, they have to be employed. They have to have income. So our job is working with them to make sure that they're self-sufficient, that they can afford to get into stable housing. In 2023, we finalized construction of our first affordable housing. It's called 7 on 7th. It's a 72-unit affordable housing apartment, a mix of studio 1 and 2 bedrooms. And came out of, as you guys know, there's a need for affordable housing in the community. It's a beautiful apartment. If you guys come out and tour, we'd love to have you. It includes amenities such as a fitness center, an interactive library, community space, and most importantly for us, case management. It's affordable housing, but it's also housed formerly homeless clients, and those formerly homeless residents, I should say, they might still need some wraparound services. So those case managers what they need in the community, access to health, access to legal care, whatever they need, our case managements are there to still support them as they're in this permanent housing. One of the wonderful things for us is knowing how important affordable housing is. This past year, we received a legislative award to afford us to build our next affordable housing unit in Pompano Beach. That's something that we're in the process of looking, getting some additional private funding and to start that project hopefully next year. So that's Broward Partnership in a nutshell of what we're doing, trying to get those unhoused residents of our community back out into stable housing. How can you guys help? Well, just having me here right now is a big help. Having me speak to, or any of our leadership, speak to anyone in the community. We take donated items. I'm right now at Hard Rock doing a drive for us. We take donated items. We take clothing or your items around your house that you're no longer use. We do not take furniture because we don't have storage. Any sort of partnership that you may want to have, any sort of drive that you want to have for us, we're very open to just any sort, because whatever we do, we definitely rely on the community to help. Any questions for me?
No, I don't, Lorraine. I'd like to thank you for being here, and I know you got to be somewhere else here real soon. So
no worries, no worries. Thank you so much.
Yeah, if you want to get more involved, reach out to Lorraine, or you can reach out to me. I have toured their Broward facilities, and it's absolutely amazing. I mean, you forgot to mention they have a computer center where they can look for jobs. They can get your hair cut. Barbers come in there. It's like you got everything there. So
Yeah, we make
and
sure that
they do not take furniture, but if you want to donate the furniture, you can always send it to me and Sherry. We need some furniture.
no, we definitely make sure that whatever, once they're in through our gates, whatever they need to get them back out into stable housing, they can work. We have, as Paul mentioned, the lab. Not only can they find employment there, but if someone wants to do some telemarketing, we have space set up for them. Right now, we have quite a few of our residents that are in the telemarketing field, and so they're working from our facility. So we make things quite easy. We look for partners to hire. We have the likes of FedEx, Coca-Cola, various hotels across the community hiring from our client pool. So if you guys that are in the construction field or looking for clients, again, this is an opportunity to reach out. We'd love to. Thank you, Paul.
All right. Thank you. I know you got to run, so we appreciate you showing up here, and we'll be seeing you very soon.
Thank you. Wonderful day.
Yeah. Okay. Next up is Alan. How are you doing today? Can you tell us about windows?
I'm doing fantastic, Paul. Thank you. It's an absolute pleasure to be a part of this webinar. It's really great to see so many highly respected professional partners that are part of this as well. I just wanted to make just a brief introduction about EGS. We are a 35-year-old manufacturer located in Pembroke Park, Florida. We manufacture high-performance impact windows and doors for high-rise buildings, condominiums, and hotels. And the part that I emphasize is American manufacturer. We support all American companies. We only buy from American companies, so we're all about bringing manufacturing back right here to the good old USA. So thank you for inviting me, and I'm looking forward to hearing all the experts today so I can expand my knowledge base.
Okay. Thank you, Alan. That's actually going to be one of our topics, is buying domestically. With the tariffs and supply chain disruptions, it's causing definitely price fluctuations and price increases. So we're going to touch on that today. Okay, Shay, how are you today? Can you tell us about your company and what you do?
Hi, everybody. Bear with me. I'm just getting over being sick. But first off, thanks, Paul and Sherry, for allowing us to sponsor. We're really excited to hear what you have to share. My name is Shay. I'm the Business Development Manager with PuroClean of Aventura, Davie, downtown Miami, and East Orlando. We are your local restoration provider with national resources. So we service, water damage, mold remediation, fire restoration, and biohazard cleanup. We are a 24/7 business, 7 days a week. So hopefully you don't need us, but if you do, it's always better to have a provider's contact in your phone rather than, shuffling around at 3 a.m. hoping you have one. And we do free inspections. So if you have anything you're concerned about, give us a call. We come out for free. We do the documentation. We give you an estimate, and then you can make, a fully informed decision on who you select as your provider. But I do want to emphasize we are in hurricane season, so make sure you have a relationship with the provider for restoration. Make sure you've contacted your roofer, your construction company. Paul's a great guy. Sherry's awesome. So I'm sure if you have any questions, feel free to reach out to them. Sorry, Paul, I just volunteered you for that. But yeah, hurricane season. So just get prepared, everybody.
Okay, thank you, Shay, and thank you for being part of our webinar series and sponsoring. We really do appreciate it. And I'm sure I'll be seeing you Thursday night or Wednesday night. We got an event coming up.
I think it's Thursday, but I have another event, so I can't make it. But you'll have to keep me posted.
All right. Joyce, how are you today?
I'm great, Paul. Hello, everyone.
Tell us about yourself.
Yeah, so I've been in the business for 17 years, but I started my own business. I founded Advanced AC. We are commercial and residential air conditioning company. We service all the Tri-County and also Central Florida. And we focus on new construction, remodel, residential service calls, building maintenance. So we do it all. And we are fully licensed and insured. We also do 24-hour service. And it's an honor to be here, to be part of this. Paul is a great guy. And yeah, that's pretty much what we do. So anything air conditioning from, if new construction to a simple service call, an installation, a replacement, commercial building or residential, doesn't matter. We can help you.
Very good. Thank you, Joyce. Sherry, is there any people in the waiting room that are sponsors that may need to be a panelist or a host? Get their input. So I know that we had Empire Waterproofing as one of our sponsors, and I've actually worked on some jobs with them. They've provided us with some DT crews where we've gone into destructive testing and forensics. They've also been on some of my concrete restoration projects, and they're very good, and their prices are very reasonable. So Empire Waterproofing. And then, of course, Best Roofing is one of our sponsors today. And Diana and Cameron couldn't be here. They had another engagement, so they asked me to give everybody just a brief rundown of what they do. Best Roofing, I think, probably one of the biggest roofing companies here in Southeast Florida for sure. And they're very good. I know they got a lot of trucks out there. They got a lot of work. I see them. They bid on my projects. I'm having them bid on a big project in South Palm Beach. I've had them bid on other jobs, and they have a very good reputation. Let's see. We got Sherwin Williams here. Hi, Isaac. I know your name's not Isaac.
I don't look like Isaac, but I'm Jessica. It's not available right now. And thank you for the opportunity to connect. My name is Jessica. I represent Sherwin Williams as the engineering support here in South Florida. I'm your go-to-go resource, and we problem solver for all painting related needs. With over 150 years of experience as a trusted painting manufacturer, Sherwin Williams offer proven solution designed specifically for homeowners, property managers, architects, engineers, designer, you name it. I'll be here, to guide you through every phase of your project from start to finish. We provided well-crafted paint specification, detailed enough for engineers, specifiers, and contractors so they can do their job efficiently and correctly. Any type of painting project that you have, you can contact me or contact Isaac. We are always available for any recommendations.
Yes, thank you very much.
You're very welcome.
I have used Sherwin-Williams products for at least 20 years. They're probably the most used in especially Southeast Florida for sure. Everything from, I don't typically use like the super paint or just regular repaint stuff. I usually don't get involved in if it's just a one-off paint job. But if it's a restoration project or a construction defect project, they have some products that offer waterproofing capabilities, like their high build Lexon. And so I've used those on, actually, To be honest, I've used that sort of project, not always with Sherwin-Williams, or that product, not always with Sherwin-Williams, but on 100% of all my construction defect projects. I've used the high build coating, and they have a good one. And Isaac has always been very on point. If I need a spec, I never have to wait more than a couple of days. He's willing to walk the jobs with us, and a lot of their products are spec'd by the engineers and architects because they're good and they're well known. So, thank you. Appreciate it.
Appreciate it.
Ernesto, you want to tell us about yourself? You need no introduction.
Yeah, well, thank you so much for your invitation. I think this, I believe that this course or this seminar or webinar, or whatever you want to call it, it is an eye-opener. I'm going to elaborate in a minute. I do represent, I'm the president and CEO of Brickell Homeowners Association. We have been around since 1990, 35 years. What is it that we do? We do advocate for all the associations that are member of the BHA for the quality of life of the residents in the area. Politically, financially, we're very pro-education. We do seminars and conferences to educate our memberships as well as the property managers within the associations that are members. So I have been around for many years now in Dade County, Miami. Investor, real estate, insurance business, property management consultant. So thank you for your invitation.
Of course. Thank you for the introduction. And Overton Construction and Consulting are proud members of the BHA, Brickell Homeowners Association, and look forward to future events. And I'm sure you're going to be seeing a lot more of Sherry and then Maria, who is our new Director of Business Development. Do you want to say a real quick piece about your experience and your role?
Yes. Hello, everyone. I'm Maria Shalak. I am the new Director of Business Development here with Overton Construction and Consulting. And like Paul said before, we not only do general contracting, but we also do consulting. We do those milestone reports, the CERS and the owner's rep that are so needed right now in the industry. So you're going to be seeing me around. And if you need anything, I'm here. You can contact me via phone, LinkedIn, email. I'm here to support, Paul and Sherry in developing the business.
Thank you. Tyler, the king,
yes,
the condo king.
Self-proclaimed. Yes, so I'm Tyler Spaedt. I work for Valley National Bank. So I'm a subsidiary of Valley National Bank, Valley Insurance Services. And really 98% of the business that I specialize in is condominium and HOA insurance, right? So on this call today, I'm going to give some insights on how these construction costs and labor shortage items actually affect your insurance policies, because you end up actually buying more insurance than you used to in the past. So hopefully I can be an insight, but part of what we do too, if we have any managers or management companies, is we are licensed in the state of Florida to teach continuing education to CAM license holders. So if anyone wants to set up a course or just needs a refresher on what our policies actually do, we're always here as a resource. Thank you.
All right. Without further ado, we will get started. Again, costs are definitely going up, and we're going to discuss some of the reasons why they're going up, and then some strategies to mitigate them. I know Ernesto has a lot of experience just being the president of Brickell Homeowners Association. And then Tyler, certainly from the insurance perspective and what he's seeing out there. I think, along with a price increase crisis, we're also having an insurance crisis. So the condos are kind of getting double teamed. So hopefully, by way of this webinar, we can give you some strategies and help you out in terms of pricing. Can everybody see my screen? Can you see my screen? Sherry, can you see my screen?
Sorry, I was on mute. Yes, I can.
Okay. Excellent. Okay, some of the factors that are driving up prices are the global tariff impact, particularly on steel and aluminum. This increase because of the tariffs are certainly affecting construction prices. If we have to pay more for the materials or we have disruption in our supply chain, being a free market system, the contractors and the people bidding on these projects are certainly going to pass those costs along to the client. Supply chain disruptions, import restrictions, challenges lead to unpredictable pricing and extended delivery timelines. We're experiencing that. Even with COVID, that just added to the chaos. We were waiting, especially for waterproofing projects, like 6 months. Roofing products, 6 months. And part of the issue is with the tariffs and the supply chain disruptions, what you're going to have is you're going to have a delayed start to your construction project. And though, a lot of these projects are stemming from SB 4D, SB 154, and then, later on HB 913 kind of gave some clarification and transparency. But ultimately, these people are on a timeline, and they did get an extension. I think it's for another year, if I'm not mistaken. But, they have to get these inspections done. And first of all, when SB 4D came out, they had basically a year to get their project started, So if you got to go through these inspections, you got to vet your contractors, you got to find the financing, and now you have supply chain disruptions, that's an issue. And I think that's probably one of the reasons that the legislatures gave them some more time, because they certainly can understand this, but it definitely has a effect on price. And here's the other thing. At the end of the day, there's a limited pool of these people bidding on these projects. So, and we're going to cover more of it, but the pool is shrinking. And so that's also driving up the costs. We have local demand issues. Concrete and rebar shortages are creating spikes. We have a lot of stuff going on in South Florida, and with the new legislation, with the construction defects, there's a lot of projects going. I was just talking to a friend of mine. He's 19 projects going, and it's a lot of work. And if you probably have all seen, you drove down Atlantic Boulevard or Collins Avenue through Brickell, even there's swing stage on every other building, and living in a free market system, that's one of the advantages, is the market will always adjust itself. Somebody will come in and fill the need. But, in short term, that's not always easy, because they have to get established. They have to set up their manufacturing supplies. And what I was going to mention on the supply chain disruptions is I've had board members and managers like, oh, well, we got another year. We don't have to worry about it. Well, I want to be very clear. What costs $5 to this year is going to cost $15 in a year from now. So yeah, you did get a break on how long you got to do your work, but all these factors are contributing to price increases, not just now, but in the future, and they're going to keep going up. And as the pool of available contractors shrinks and some other factors, you're just going to pay more. So, it's pick your poison now. Do you want to get your project started? Do you want to, lock in these material prices? Do you want to lock in your contractor, your experts, your owner's rep now and start planning? Or do you just want to wait a year and hope for the best? So that's a couple of things to think about as we go through. Do you have anything to add, Tyler?
Yeah, on the insurance side. So think of it this way, right? If the materials are now costing more, the way we're buying insurance for our building is we are buying it based on replacement costs, right? So What does that really mean is they're factoring in the price per square footage on these buildings of how much it would cost them to reconstruct the buildings. That being said, is in the past, when I first started insurance 10 years ago, appraisals used to go up about 3 to 6% in value, which essentially means as the consumer, you're buying 3 to 6% more insurance than you did last year or within the last 3 years. The statute says every 3 years we need to do appraisal. So what we're actually seeing now is appraisals going up anywhere from 10 to 40%. So as the consumer, again, is you may save with the soft property market on the cost of the insurance, but now instead of $20 million of replacement costs, we could be purchasing 30. So we're buying more insurance, but the price that we're buying the insurance for is going down in the soft market that we have right now.
Yeah. And, you know, the insurance replacement costs are directly correlated to construction costs, you know, what's going to cost to do your project. And I guess that was really kind of full circle. My point is, again, you know, I think you really have to consider, do I wait on this project? Do I have the opportunity to wait? Or do I start planning now? And, you know, you got to pick your poison, I guess. Ernesto, do you want to add to that? I know you have, we had a conversation about insurance costs and the fact that a lot of these associations aren't fully insured.
Well, we're heading eventually during the seminar. We're heading into that, but we have actually some type of laundry items here, housekeeping items that during this course on seminar we're going to touch bases. But number one, a reminder that the extension by the state of Florida is not 1 more year, December 31st, 2025. Meaning that all associations must have completed their milestone inspections, and the work that they are needed should be already executed by December 31st of this year in order. If not, you are not in compliance. So it's not 1 more year. It is December 31st, and there are not going to be no more extensions, no more grace periods. That's number one. Number two, talking about cost-effective and saving funds, start choosing a good, honest rep or project manager. Number three, start working on your project budgets. Number four, start working on the strategy on financing. And number five, start communicating to the membership what is going on and how much is going to impact their assessments. And quickly, talking about insurance, if your cost of replacement value is not covered 100%, do not expect, and Taylor can elaborate on that. You are not going to get a good premium from insurance, and no financial institution is going to lend you money if you are not in compliance with the state. So I just leave you that as some food for the thought during this seminar.
Yeah, thank you, Ernesto. We appreciate that. And yeah, basically you have 5 months, you know, and 4. Okay, 4. Yeah, we're going on 4 months. So you don't got much time. So, and I think you're right. You know, with the owner's rep has really skyrocketed in South Florida because the nature of the projects, the complication of the projects, the dollar size of the projects, and then just all the moving parts. You know, I've worked everywhere across the United States, from basically Portland, Oregon to Florida. And, you know, sporadically you see maybe some old retired general contractors that maybe do some construction type management. Maybe in California, not so much across the rest of the United States, but down here it's almost a requirement that you have an owner's rep. And just the 30,000 foot perspective, I think, if you pay, say, 3 to 5% to an owner's rep of the project or the contract value, but they save you 20%, it's a great deal. And plus they're advocate, you're going to have an engineer, you're going to have, doing design and specifications, you're going to have the general contractor. You really need somebody advocating for you. So I think, and whether you're doing a milestone or a Sears inspection too, there's always a role for owner's rep, and one of the big advantages that they can provide is a vast network of subcontractors to get bids. So if you're just getting on the phone as a manager and trying to call, or you've seen a webinar and, you have a very limited pool, there's a lot of companies out there that do this type of work and they don't advertise really. They just, they work on word of mouth. They're very good companies. So thank you, Ernesto. Let's talk about the skilled labor scarcity. There's a shortage of qualified workers. I have worked with other companies in the past, and their model was to self-perform all of the work. And I'm not a big fan of that work. Number one, because there's a labor shortage and it's hard to find good guys. And number two, you may find somebody that you think is a good guy, but then they get on the job and they have absolutely no idea what they're doing. So, my MO has always been to hire a specialty. I guess that's another thing I want to touch on really quick is, you can call up 3 general contractors and get 3 bids, okay, or 4. But you have to realize that you are paying somewhere between, I'm just going to guess, so somebody could disagree, but you're going to be paying between 20 and 35% markup on all the subcontractors. That's their market. With an owner's rep, you have the ability to divide the tasks up. You have the ability to get waterproofing bids. You have the ability to get concrete restoration bids. You have painting bids. And essentially, if you have an owner's rep or your consultant in place, you can save a lot of the markup on the GC. You don't have to, but that's one of the ways. And I think that's why Ernesto pointed out is, I think, in terms of saving money, these consultant type positions can actually, you got to pay up front, but can actually save you some money. A lot of the labor shortage is due to a lot of the skilled trades, like the concrete restoration and waterproofing, roofing. A lot of the people that have been around and have done this work for years and years and years and years are now retiring, and all the new people are going into, tech, going into other fields, and we don't have the type of workers that do this type of work anymore. And in terms of the schools, like the trade schools that teach these types of trades they're not around anymore. So not only is it very hard to find people, and when you do, they're not very good. And, a lot of people are retiring. So, pre-qualify your subcontractors, ask them for resumes of key foremen, consider phasing projects to align with workforce availability. I think as part of the interview, I always ask the subcontractor, who's going to be managing, or ask the GC or the subcontractor, who's going to be managing my job? I want to see his resume. Has he done this work before? What's his crew look like? How long they've been doing this? What other jobs have they worked on? So it's one thing to get references from a GC or a subcontractor. Hey, we got a reference from these people. It's really good. But I want to understand who's going to be on my job site. Do we have a reference for those people? Because I'm telling you right. Go ahead, Todd. I'll let you.
Well, I remember, I think 2 years ago, maybe 3 years ago, when this all first started happening, when people were really focusing on the milestone inspections, I was getting LinkedIn messages and calls from people in New Jersey, Pennsylvania, New York, and saying, how do we get down there? How do we do this? Similar to what Paul's saying, you don't want someone who's not a specialist in the Florida area, right? Because those buildings in New York and New Jersey, the processes and how you go about things and construction types and everything are much different than a lot of the things we have in Florida. So a lot of people just came down as a money grab saying, I know we can only do portions of the inspection, but we already do this in another state. We're going to try to do it here. So that's another thing to look out for, is like, where are they coming from and what experience do they have actually, like, geographically in your area?
Yeah, absolutely. I guess I'm okay with like engineers and consultants if they're doing just design and specifications. But even then, I mean, we have plenty of engineers in South Florida market that specialize in concrete restoration and waterproofing and the type of projects we have there. Yeah. So I guess in my opinion, you know, unless there was no other alternative, I would probably select my vendors, my engineers, and my owners reps from South Florida market, you know, their experience with these type projects. And I guess I've talked to many of my subcontractors and they're like, hey, you know, we got to put in like lodging and meals and stuff. You know, the state mandates how much they got to charge or pay their employees for, you know, every night they have to have cooking facilities or per diem. You have to supply them with housing. And listen, South Florida is hard to find cheap housing now. So if these guys, you know, got to come in from, if there's no labor in South Florida anymore, or very little of it, and they got to come in from, say, Tampa or Naples or Fort Myers or stuff, it's going to add to the cost. You know, it's not cheap to pay per diem and hotel and lodging, and then, you know, you got to pay them to drive here too. So that's another factor. Labor shortages.
From the insurance side too, Paul, well, a big part we're seeing on labor shortages, I mean, construction, most of the time, the timelines are a little bit unpredictable, right? You could say 12 months, it might take 15 or 16. But now with these labor shortages, imagine, put yourself in the carrier's shoes, right? Is you are during hurricane season right now, which is going basically from June 1st to December 1st. And you have a building that's exposed with concrete restoration, or you have a building that the roof is exposed, or they're doing repainting, they're resealing the building. So a lot of these carriers are they're very cautious on the timelines, and they're scrutinized because now with the labor shortage, you might not be able to follow that 12-month timeline that you just told the carrier. And now your projects may be going into the next hurricane season or going longer than expected. So part of the reason why you hire someone like an Owners is they are able to go to the reliable contractors that they know are working, they know they have the professionalism, and your timeline may be a little bit more accurate because of that.
Yeah, absolutely. We have wage inflation. You know, if there's less workers, they know that they're going to command a higher price per hour. I've seen that in project managers. I've seen that in foremen. Like, you know, I used to have pretty much set pricing. This is what a project manager makes. This is what a superintendent makes. This is what a foreman makes. And now the people that come to me, they say, I'm a project manager. And I'm like, well, a project manager needs to know how to do construction schedules. They know how to do all the contract administration. Like a project manager, I should not have to be involved in your job. You should be able to run it, have to communicate. Well, I don't do all that. I just run the job. Okay, well, you're not a project manager, but you want project manager pay. And like, yeah. I'm like, okay, well, that's what we're faced with, you know, and that's what you're left with. And, you know, you got to pay them or you risk not being able to start jobs. So that's definitely have an effect. Quality concerns, you know, if you're using inexperienced or unskilled workers, you might save money in the short term, but in the long term, cutting corners never works. The rework, the failing inspections, the city inspector or your owner's rep or the engineer, it's never going to work out like you think it is. And Tyler touched on this, schedule impacts. If the companies are spread very thin, they're going to have less people to work on your job, and if the job takes longer, you have to consider, general conditions on a typical construction project could be, somewhere between 15 and 18%. And that includes homeowner notification, the project manager, lay down yard, scaffolding, swing stage, boom lifts, whatever that is, all of the stuff that's not actually producing the job. Well, it helps produce the job, but not actual work. Is 15 to 18%. So, that's by months too. So if it takes 12 months to do the job, or supposed to do the job, and then it ends up taking you 16, you've just extended all those general conditions. And there's a couple other strategies we'll get into in a couple other slides here, and we'll talk about maybe how we can help mitigate that.
Yeah, Paul, I want to add something that we had seen over and over and over, unfortunately, on a lot of associations. Associations are in order to save money, they're thinking that the special projects can be handled by a property manager. That is a major mistake. First of all, that's not the function of the property manager. And secondly, you will be placing and putting a burden on the property manager's shoulders, a responsibility away from the daily operations. That is a total mistake. So that's why the importance of having a project manager aside from a property manager.
Yeah, I couldn't agree more. I mean, there's a lot of property managers that, have a lot of experience, but if you're involved in a $5, $10, $15 million exterior concrete restoration project, the amount of construction administration, the amount of vendors you got to know, the paperwork, the inspections, you can't do it by yourself, and nobody should expect you to. You shouldn't. You got to put an expert team in place. And for me, the expert team is always, specialty subcontractors or GC, and then your engineer that does design, and then an owner's rep. It's a lot of stuff that goes into pre-planning your job, what we call pre-construction services. And then, once production starts, it's a lot of paperwork. It's a lot of communication, and it's really not the property manager's role. So thank you, Ernesto. Okay. We're going to talk about insurance and bonding costs, and Sherry's already heard me on my soapbox about payment performance bonds, but to enlighten everybody else, again, I've worked all across the United States, and I can count on one hand how many times I've been asked for a payment performance bond in anywhere but South Florida. So the engineers, owners, reps, and attorneys have convinced everybody that you have to have a payment performance bond. So I'm not saying it's not a good idea. It offers significant protection. It makes sure that the payment bond makes sure that the subcontractors and material suppliers get paid. And the performance bond makes sure that you do the work according to the specifications, and they can get proper sign-offs. The issue that I'm having now is there's a lot of different ways to circumvent having the requirement of a payment performance bond. There is retainage. As long as you have your team in place, your contractor, your engineer, your owner's rep, there's a lot of things you can do. Typically, and the standard practice across the United States is to get lien releases, okay? You do a certain amount of work between June 1st and July 1st. You have that work inspected by your engineer and your owner's rep. You make sure that work is approved. You ask the contractor for a lien release from him, his material suppliers, and his subcontractors. You get the lien releases. Now you've just eliminated most of all the possibilities of something happening bad where you have to go after a payment performance bond. And another thing is, I've asked a lot of attorneys that I work with, and like, how many times have you ever seen somebody go after some performance bond? And they're like, I can't think of any. So, with the lien releases, and here's another idea. You can always have and this is kind of putting the burden on the association or the manager, but the association or the management company or the property manager, they can always pay the contractor can say, hey, here's the people I owe for this amount of work to give you a lien release. If you want to pay them, you can pay them direct. So it helps with transparency. You know exactly how much they're paying, and you can pay them directly. And now you know for certain that they have been paid and they can't lien the property. Does that make sense? And then at the end of the day, it's causing a big spike in construction process. And this is, for me, this is probably the biggest factor in rising constructions. It's not tariffs. It's not the labor pool. It's not the shortage of contractors. It's the requirement for payment performance bond. So here's what happens. Payment bond is 1%, charge contractor, okay? And I know the engineers and the owner's rep, they always put in their specifications, you cannot mark up the payment performance bond. Well, maybe some contractors don't, but most will, and they'll put it in general conditions because they're like, we're not going to buy a $200,000 performance bond and run it through our company without a markup. That's just not good business sense. So even though they may tell you they're not marking up, they probably are. So your cost them 1%, you're paying 3%. So on a $20 million job, 3% of 20 million is $600,000 for the payment performance bond when they're paying, $200,000. So you're losing $400,000 in money that you could put towards the repair project. And then the biggest factor on top of that is there's a lot of big contractors out there that are 100, 200, $300 million companies. They know this is going on. Okay. Typically we talked about markup is, I guess for me it'd be 20 to 25%. But I know this for a fact that companies that are very big and they know that the pool of subcontractors that cannot get bonds or have reached their bonding limits, they're just bidding jobs higher. Because I've gotten bids as an owner's rep and as a general contractor, I'm like, why are you so high? Like, you're twice as high as everybody else. And they're like, we don't think anybody can bond for this project. So, and we're busy. We don't really need the work. So now you have, and I'm not saying all contractors, I'm saying this is a possibility. Okay. It's something you need to think about. So they're marking it up from 25% to 35%. Now you've just increased a $20 million job, $2 million. So now you have $2 million plus the 400, that's $2.4 million that you likely might be paying extra for the requirement of a payment performance bond. And I'm happy to sit down with any of the attorneys or the people that disagree with me and talk about this. But for me, this is definitely the single biggest factor. And again, I'm not saying it's a bad idea. I'm just putting something out there in the atmosphere to think about.
Paul, believe it or not, you just explained the insurance market last year, why it was so hard, is that there wasn't many carriers that would write these buildings, right? 1970s, 1960s, buildings on South Beach, Gold Ocean Mile, etc. There was no competition. So the carrier's like, guess what? I'm going to charge you $500,000, even though you paid $250,000 last year. because I know that no one else will do it, and I'm going to take the risk, right?
I remember that.
I will say this is really interesting. So, like with these, whenever we have a contractor come on premises, right, is the certificate of insurance is either sent to me or the property manager. So I'll review it to make sure that they have active liability insurance, active workers' comp, proper umbrella limits, etc. But with all these rising costs, the things that people can't see is the actual policy language. So what if you have a certificate of insurance that shows you how much coverage they have, but then in the policy, there's an exclusion for working on condominiums or HOAs, right? So what a lot of people don't do is actually ask for the policy from the contractor, because think about it. When prices are going high and you have the ability to cut corners, not saying everyone's going to do it, but you have the ability to cut corners, and on the certificate of insurance I'm giving you, it's just generic information, doesn't include any exclusions. For $50,000, you may cut a corner and take a carrier that doesn't have as much coverage, and no one's going to know unless they looked at the policy. Who would know? Right? So that's part of what we do, is just advocating for the associations, because the certificate of insurance just tells you if the limits are there. It doesn't tell you what the actual policy language and what coverages are included in that policy.
Yeah, it's a very good point. There's a lot of good contractors out there that can't get a bond for a $20 million job. So they're automatically eliminated. So with the new legislation, the construction defect, and just, the lack of the deferred maintenance, there's a lot of projects going on. And, I know just because I do all the condo connects and I work or I present alongside the lawmakers and I've gotten their opinions, nobody's thinking about the payment and performance bond yet. But I see it because I work with numbers all day. This is raising the prices, and essentially it's creating an oligopoly. Only there's going to be a small pool of very big GCs that can do the work. And if you think they're not going to rise their prices, I got news for you.
Paul,
Yes.
as we speak, there are contractors that they cannot even afford to bond a project of $6 or $4 million. Realistically, as a matter of fact, I had an experience last week. I was in an interview of for one of my clients of they are doing the 40 years recertification, and we're doing an interview on the potential contractors. And at least 2 of them out of the 3 that we were interviewing, they couldn't afford the bonding.
How much did that bond cost, Ernesto? Just out of
in one of them, $2.3 million. They only could afford only $500,000 of bonding. That's it.
Yeah. So typically, if to get a $20 million bond, the bonding, the surety company is going to want to see you have $5 million in working capital has no debt against it or anything. You need to have 500 or 5 million cash laying around to get a $20 million bond. So, a $2 million job, you're going to need $500,000 cash. And yeah, it's definitely limiting the pool who can vote them. Ernesto, are you going to be there August 27th at Condo Connect?
Yes, I will be there. And I want to add something else here. On the other side of the coin, would you like to be dealing with a company that is not financially sound? Ask your question. Be careful. Because why we lately we have been requesting this bonding? Because experiences that we had in South Florida, and I cannot talk about North Florida, but specifically in South Florida, they have been companies that, they hire subcontractors, that, in the construction business, they subcontract some, labor, and what happens? They go bananas, and they lose, they leave you in a limbo, and that's why, it's a balance. You have to be careful on that. I understand your point, but I gotta tell you something. I will never, as we see the market right now, the instability that I see in the market, I have to make sure that my projects are bondable.
Yeah, I think a lot of people have that opinion.
I want to play safe, and I want to play safe for my clients.
Yeah, I think, ultimately the legislatures, if they want to help these people that live, listen, these people that live in these condominiums are overburdened right now. There's a lot of people that have to move out of their homes. These assessments are very large. They're very burdensome. And I think ultimately, I just want to get the facts out there, but I think ultimately the solution is the legislators come up with a solution to help maybe some of these smaller contractors get payment performance bonds, like raise their limits. That would certainly help the construction costs, and it would give the opportunity for other contractors with more competitive pricing to entertain these projects. And, they do have the SBA loan. If you go through a regular surety company, they'll want $5 million for a $20 million bond and a lot of other stuff, but that's the main criteria. So, and the SBA will do, I think, 10 times the amount. The paperwork is very, much more involved, but if they could come up with an agency or a company or a government regulatory agency, I don't know who it would be, but if we could get these other people bonded, pay a performance bond that was guaranteed, I think we would be doing big things.
I want to say something else here. I think that, yes, 3 years and a half ago, we projected that the condo sector was going to get into MRI. And everybody kept saying, MRI, what are you talking about, MRI? 3 years and a half ago. Simple. MRI. Right now, we are not MRI. We are in hospice right now. Yeah. That's where we are right now. Maintenance, reserves, and insurance. That's the bottom line. But I tell you what, we blame everybody. We blame the state of Florida. We blame the county. We blame the municipalities. We blame the inflation. We blame my mother and the uncle and the whole family. But guess what? The reason why we are in this crisis is because we have been bad leaders, bad associations, bad business people representing memberships. Let's not lie about ourselves. We had bad associations, and that's why 60% of the associations nowadays, they are not in compliance because we are bad leaders. We complain about politicians, but we have become the worst politicians of our memberships, bad board members. We have to become better board members in order to avoid this mess. This mess is because our fault. Let's be realistic.
The hard part too with all these board members is, especially a newly elected board member, you get on the board, you want to fix things, but you don't want to be the villain that now our cost is going up per month, but we're fixing all these necessary things. So I think there's an internal battle with a lot of these new boards. Is like, we want to fix the community, but we don't want to charge Susie, who's on Medicare and Social Security, $700 more a month to fix the roof and fix that. And I think Jason Pizzo actually said it best, is a lot of people treated associations like hotels, right? You go to a hotel, you turn the air a little bit lower, you might take a little bit longer of a shower, and you don't really think about, the inside of my unit's where I live. Forget the outside of the association. And then all of it tumbles down the road, and here we are today.
Yeah, I couldn't agree more. Actually, I was doing a presentation with Senator Pizzo, and, the number one thing we always get is where are we getting this money? And he asked them a question. He's like, how many years in a row have you voted to waive funding and reserves? Well, every year. Okay, well, that's a problem. You've waived reserving these funds, and now you don't have any. When's the last time you raised your dues? Well, I don't want to raise my dues because that's an unpopular decision. I won't be on the board any longer. Okay, well, I'm sorry. This is tough love, but I'm not going to have 93 people dying in my district again. So you're going to have to do it. And I know it's going to be painful. And I think as time goes by too, they're opening it up for some funding and stuff like that. But at the end of the day, Ernesto touched on this, is at least the legislation part, it's not going away. And I wouldn't count on it. I think Ernesto's right. There's not going to be any more extensions. They may try to do something with funding or maybe pay a performance bond but it's here to stay. And if you don't comply, you're going to get in trouble. And I guess that would be the main takeaway. We touched on fewer qualified contractors, single bid risk. I think most people, managers and board members, understand you're not going to just go get one bid. I think, the consultant, engineer, owner's rep, one of those likely has a vast network of subcontractors or GCs that you can get bids from. Market saturation, everybody's busy nowadays. And if you have like a rush project and we get a lot of calls that say, hey, we're behind. Here's the drawing specs. We need the bid next week. We have to start because we're getting fined. That's not a good situation for the condo association, because contractors are going to charge a premium for that. If you need a rush bid and you need a rush start date, that only means that they have to put something else off. And to put something else off, good business sense would dictate that you have to be the opportunity you're working on or that's going to come first. It pays more. So, you need to prepare. Geographic limitations. We don't really have that problem in South Florida. We're not out there in the boondocks. Milestone inspections and structural integrity requirements significantly increase association maintenance costs. Yep, that's one of the biggest factors is, we already had a lot of restoration, facade restoration, concrete restoration projects, just because of deferred maintenance and construction defect litigation. And then SB 4D came along and just essentially doubled the amount of work, if not more. So we have this huge pool of work. Safety retrofits, I'm getting calls every day. Emergency lighting, fire suppression, they all need to be upgraded, and these are mandates as well. And they're not cheap. And usually those will be, either the building department will advise you, that all your systems need to be upgraded, or it'll be found out through a milestone or a structural integrity reserve study. But we're seeing a lot of that too. It's not just the concrete restoration, it's life safety, smoke detectors, emergency lighting, mechanical elements. It's all got to be upgraded and performed to code. You may get grandfathered in, but with all the urgency and the attention on condo safety, it's a very slim chance that you are not going to have to do this. All right, let's talk about a little bit of some mitigation strategies. Avoid emergency pricing. I just touched on this. Early planning. Get your team together. Get your owner's rep, get your general contractor, get your engineer, and start planning now. We got 4 months, so you're really out of time right now. If you didn't start yet, you should have. If you haven't started yet, start today. Get an owner's rep, get your specifications and drawings, get out to bid. Don't try to do it by yourself. Ernesto touched on this. There's just too many factors. I've been for 25 years been doing this type of stuff, and without that experience, I would have no inkling where to start. So I wouldn't want to take it on. Engage professionals early. I just touched on that. Budget accurately. I think there's another slide for this, but I just wanted to bring up that as a general contractor, I'm asked to bid on concrete restoration projects. And what I'm seeing is perhaps the board did not hire the right group of, whether it's the engineer, usually it's the engineers, but what I'm seeing is they give you drawings and specifications, and typically the engineer is going to specify quantities. They're going to detail and specify quantities, because how do you create a budget or go get financing if you don't know the quantities and you don't know the actual numbers, right? But what I see a lot of is, because, you know, this has happened on 2 mid-rises where I got the drawings and specifications, and it had a bid sheet with quantities, and it says 10 cubic feet of full depth concrete repair. I'm like, there's more than 10. So I call them, I'm like, what does this mean? Oh, well, we didn't actually, get swing stage or boom lifts and actually quantify the repairs. These are just placeholders. I'm like, well, that's great, but how do we, like, so what happens when there's, instead of 10 cubic feet, there's 100? How does the board accurately project their budget? How do they actually go get financing? Like, if you're telling them it's 10 cubic feet and you're using that as maybe just like a unit price for more repairs, then I don't see how that works. Does that make sense? So, I have projects right now where the board was savvy and they're like, hey, that doesn't make sense to me. So they reached out to us and they're like, hey, how do we avoid leaving ourselves open to all these change orders? And I said, well, you need to hire a consultant, and you need to get swing stage or boom lifts or scissor lifts. You need to sound the buildings. You need to maybe make some openings, and you need to quantify the repairs, and nothing's going to be foolproof. But I have several projects now where they're like, yeah, that makes sense. When can you start? Because they know on the back end, it's going to help them with getting financing. It's going to help them zone in on their pricing, and you're not going to see these vast variances from, what's in the engineering scope and what the reward numbers and quantities are once you start the project.
Yeah, I think the consultant's important too, because you've already worked with some of the other companies and you can offer them those same companies for bids. If you're a board of directors and you're now set with this task and you don't know anything about construction, what's the first thing you do, right? You go on Google, you go online, you try to find the top engineers or the contractors in your area. Well, you don't really have a track record of the work that they've done or anything. So hiring a consultant from this, you may say, oh, we don't want to have extra costs of having a consultant. By not having a consultant, you're going to end up costing yourself way more in the end, because you didn't have that true direction on the compass of where we are now versus where we're going.
Yeah, absolutely. And then, I think to add to that, hiring a consultant, you're going to have ways that if they have the experience, they can add some, material alternates that might be cheaper. Might be an opportunity for value engineering too, right? So those are the things that we look for, and I think always you're gonna pay up front, but ultimately I think it will save you money.
On Paul, on your budget projections, we highly recommend taking in consideration the market, taking in consideration that there are associations that they have not even completed the milestone inspection, taking in consideration that they have not even signed yet a committed contract to do the necessary work. Extremely important. Number one, to hire definitely a professional project manager with extremely skill in construction. If you don't do that, you are shooting yourself in the foot. That's number one. And secondly, your financing and your budget, by the way, the projection on the budgets include, you have been in construction. When you start working on a concrete restoration, there always going to be change of orders, right or wrong?
Absolutely, 100%. Especially in concrete restoration. There's no way to get around it.
Taking in consideration change of orders, taking in consideration the labor scarcity that we are living, that we are experiencing right now, taking in consideration the quality concerns, the schedule impacts, you name it, at least include an additional contingency 20% on those total costs. Add to the total project cost 20% additional, because you are going to have those challenges. There is no doubt about it. So our recommendation, add a contingency of 20% in top of the projected amounts.
Yeah, we're actually seeing too on our end, because I'm a part of the bank, is we're seeing people come to the bank, take out a loan, and then about halfway or 70% through the project, they're coming back and saying, hey, we actually need $5 million more. We're like, well, what happened? We just didn't know it was going to cost this much. It's more than it was on paper 5-6 months ago. So I agree with that statement 100%.
Yeah. Thank you both for that. That's something, look at construction, whether it's stucco over wood framing, whether it's concrete restoration, we have tools like GPR, we have thermal imaging, we have stuff like that. But at the end of the day, I can't see through the walls, right? And I don't know if I was to quantify repairs. I have a really good idea if I'm able to sound the buildings and get up close and do my inspections. But change orders are, for tasks like, I don't know, painting or something, you really shouldn't have any change order. But concrete restoration, you're going to have change orders. And, every single bid we sent out, I think Ernesto's right on. I put a 15-20% contingency on every single one. And I tell the board, you're going to end up spending this money. I just don't know where yet. And, it could be a whole long laundry list of reasons, but typically it's just because there's more repairs and there's more going on behind the walls. And if you don't, you're going to have the situation like Tyler just described. People are going to coming back. I know of jobs where I've been following them and they have to go back and get like 2 or 3 more assessments because costs keep increasing. So you just told me you did not hire the right team and you did not prepare for contingencies. And, it's a bad situation to be in. We talked about initial consultant fees are probably offset by efficiencies and money that you can save. We also talked about the adherence to specifications throughout the project and getting good specifications. I just told you experience where they weren't good. And, first of all, I'm not really fond of getting involved in jobs. If I see something like that, to me, that's a red flag. I don't want to be involved in a project where things haven't been quantified, because, if you're the owner's rep, it's one thing, but if you're the GC and they haven't prepared for this stuff, or they haven't quantified the repairs, and now all of a sudden it's your job as the GC to have these hard conversations with the board and the property manager, they look at you and then you get on this path to kind of a contentious relationship, like it's your fault. You're gouging us. You're trying to get more money from us. And I've been in those positions and it's not a good position to be in. So, I try to steer clear of those types of projects. But that can all be avoided. Just make sure that you have a good team in place. Let's see here. We talked about technical expertise. They have the experience to do this. I just went over the detailed specifications. We got to quantify stuff. Got to be detailed plans and drawings. The specifications and the repair drawings should allow you to take those down to the city and get your permits. If there's a whole bunch of revisions, it can happen. But also, if there's a whole bunch of revisions that need to be done, perhaps you're not working with the right engineer. Document everything thoroughly. Put everything in email. Project managers, owners reps, engineers, general contractors, they all have access to software where you can track stuff, company cam, where you can store pictures and it tags them for you. Just what I tell people in every situation, pretend like this is going to end up in court. Okay? If you ever been through a lawsuit, how would you have done things differently before then? And do that now. Because the person that has the most documentation in a lawsuit, if things get sideways, wins. So document everything thoroughly. We talked about the clear scope boundaries. We have 5 to 10% budget here, but I think 15 to 20 is more in line. Lump sum contracts, fixed price agreements protect associations from unexpected cost increases compared to risky cost plus arrangements. I do agree with that. I think there's a place for cost plus contracts, which basically means, the GC is going to be transparent. He's going to show you, he's going to create a bid matrix for you, or the owner's rep does, and they're going to get all the subcontractors' prices, and then the GC is going to put his markup on top of those, and everything's transparent. You can see, I guess the only reason, or some of the reasons you wouldn't do that, is because you don't know the amount of change orders. I'm actually a fan of cost plus, and I'm sure, some people may not agree with that, but it adds a layer of transparency. If I show the association, this is exactly what all my subs are charging me, and here is all their contracts, or their work orders and subcontractor contracts, and I charge you, 15%, then I think it's a good deal and that would be including with change orders too. As long as you have your expert team, I think that sort of arrangement works. It's better to have probably a lump sum if you need to get financing or something like that. Go ahead, Ernesto.
Yeah, by the way, our recommendation, do not hire a project manager nor an owner's rep based on an hourly basis. Do not do that. It's a total mistake. Total mistake.
Yeah. So actually, that's a pretty good point. Typically, if it were me, I would structure my proposals for owners represent as there's really two components. There's pre-construction services and then there's project oversight. One before the construction starts, where you're doing construction schedules, you're sending the RFP, you're creating the RFP, you're sending out to bid to all of the subcontractors or GCs, scheduling, permitting, all this sort of thing would be all kind of lump sum under pre-construction services. So I usually give the option. I'm like, hey, this is my hourly rate, but it will not exceed this amount. So I think the hourly rate works as long as you get a commitment from the project manager or rep that they won't exceed a certain amount. And then if they do, I guess that's a different conversation. But I think, a percentage, I like the percentage because I feel like I can get things done faster. So it's actually better for me. If you're really good at your job, then the percentage allows you to maybe come out a little bit better in the end. But anyway, I think it's a good point. It's just like attorneys, a lot of defect attorneys, some will charge you by the hour and some will charge you on a contingency based on the settlement. And I think to Ernesto's point, I think the contingency, who knows? I don't know, but I think it's a really good point, Ernesto. I guess the pull to overbill per hour and not do things efficiently would certainly be a reason not to do it on an hourly basis and more of on a percentage.
And also request, once you make a commitment and you establish a contract agreement with your project manager or a special projects contractor, make sure that you get on the weekly basis reports from this person. That's the most documentation, the same thing that you mentioned before. It's about documentation, but every week you should have a report from this person.
Every week they should come to town halls, they should attend board meetings, they should make the time for you. And also I'd like to add that, pricing's on a sliding scale. Some projects may require an owner's rep there all day long. Like they may need to put a project manager that's there all day long. And that's something to look in this fine print. Are they charging me by the hour or a percentage? If you're charging a percentage, well, how often are they going to be here? They just, a lot of jobs, it would take a couple days a week to go spend a half day there. And that's what they're charging for you. And you may be disappointed to find out they're not going to be there every day. So make sure you know that.
Yep. And it also can buy you more time, right? A lot of these carriers, what they do is about 2 to 3 months after you actually bind coverage with the carriers, they'll come up with a list of recommendations or a list of items they want you to complete. So even showing them those updates every week at least buys you more time, saying we are working on it. It's not that our feet are in the mud. It's just that these things take time and we're still doing it.
Yeah. We talked about competitive bidding process, detailed specifications. Can't stress how much detailed specifications make a big difference. Contract strategies, clear contract language. Again, detailed specifications prevent disputes and control costs throughout the project execution. A lot of contractors are going to submit their bids on their forms that are obviously they're designed for the general contractor or the subcontractor. A lot of people prefer to use the AIA version. The only thing I don't like about the AIA version, it was, designed by architects, but it does favor the general contractor a little bit, but it's very burdensome. There's a lot of checks and balances in there. I think ultimately, I would first check with my general counsel for the association, see what kind of contracts he had, and at the very least, I would have an AIA. If I was a board member, I probably would not sign just a contract given me by the general contractor that they designed. Change order protocol. We talked about change orders as necessary evil construction. What's the protocol? What are we doing if we run into a lack of work? Do we have, a firm protocol in place? Definitely, we don't want the contractor to just start doing repair work and then charge us, because obviously they can charge whatever they want. Actually, I have an anecdotal story. I was brought into a project where the project started, I think it's a $5 million concrete restoration job, and it's around $40 million now. It's all change orders. And basically this kind of shady contractor has just been finding extra work and billing the association, and the association wasn't really paying attention. So, 5 to 40 million is $35 million in change orders. Excessive for sure, but that could have been avoided if they had an engineer or owner's rep and they had a protocol in place for these change orders. What are we going to do? Number one, if they do run into something where it exceeds the cubic foot or square foot or whatever unit we're working off of, first of all, we got to stop. stop work, document. If you're the GC, you need to get with the owner's rep or the engineer. And then you need to write up a change order, a very detailed scope of work. Hopefully it has pictures involved in it, and you need to present that to, somebody needs to present that, probably the owner's rep, to the board to get it approved. I can tell you this, just as a general contractor, I have subs and I have to remind them this of every single job. And it's just little things, but if you're not on top of it, it can add up. They'll just be in the course of work. They'll remove some stucco. They'll see some rotten wood, and they'll just want to replace it and send you the bill. And like, I didn't have the opportunity to approve the work, and I didn't have the opportunity to get it approved by the board. So what I tell them is, in most cases, if it's something small, I'll say, look, I let you slide this time, but don't ever do that again, because, we need to document these processes. Again, if something does make it to court or there's a lawsuit, we need to have documentation. We need to have pictures. We need to have a process in place. And also, it can limit the amount of change orders, and that will affect the ultimate price of the project. Request deductive alternatives. We touched on this a little bit. Are there cost-saving options that can be removed from the scope without compromising project quality? And I think that's something that your owner's rep can help you with. Consider value engineering. That's the first thing I always look at, especially with 558 claims. And this is going to apply to milestones and SEERs and the work that stems for that in these concrete restoration projects. But in a construction defect claim, you're going to do destructive testing, and basically the engineer of record or the person that produces the building assessment report is going to say, you have to replace everything. You can't just do patch repairs. You can't just do corner. It's everything. It's all the doors and windows. It's all the stucco. It's all the roof. It's all these things. Well, ultimately, it might be a $20 million claim, but the association's never going to net $20 million. They're going to net, let's say 12. So you have this disparity between 12 and 20 million. You can't do the $20 million. So it's absolutely 100% necessary to value engineer these projects. And what usually that means is more of targeted repairs and not just doing everything. And like I work with engineers all day. Engineers are very famous for what I call over engineering. They think it's just that's the way it's done, but there's always an opportunity to value engineer. You just got to look in the right places. Material substitutions. You can always use different materials without sacrificing durability and compliance. And here's something that I've started initiating. The board can offer incentives if the contractor finishes his job quicker than what their schedule says. And they can also penalize them, which typically there's always going to be a penalization clause in there. It's called liquidated damages if they go over. But how about offering them a small bonus if they finish beforehand? Again, the longer the project goes on, the general conditions are extended. You just, you're every month it goes over, it's costing more money. Pre-construction investigations. So, I think the legislators did a really good job of putting in these milestone inspections and structural integrity reserve studies. If they see something in a milestone inspection in phase 1, automatically you need to do a phase 2 inspection, and that's opening stuff up. We see a shear crack, got to open it up. If you see something, spalling concrete, got to open it up. And the same can apply for when you're quantifying the specifications and the drawings, repair drawings for your job, and you're quantifying stuff. The money spent just taking the extra time of doing some investigations, small upfront investigations, they can save you money and substantial money by identifying the problems beforehand. It can also help preventing surprises. We call it destructive testing. In these cases, I would probably term it more of like limited destructive testing. But again, here's another opportunity up front to really dial in, not only quantify your scope of work, but ensure that there's not going to be a vast amount of change orders once the job starts. Rush season. I don't know. I put this slide in here, try to get the contractors in downtime, but I don't know that there's any downtime in South Florida right now. I don't know if there's a good time of year to wait to get your job done. I think now we're to the point where, like, if you haven't started yet, you're too late. And if you haven't started, you need to start tomorrow. And there's not really a time where, the contractors are going to be in slow mode. Everything is very upbeat right now. Everybody's busy. Everybody's trying to find time to do these jobs. So I know, Ernesto, you want to expand on that?
No, I'm just going to remind you, the tsunami is already here.
Oh, it is?
I mean, there is no more. It is like, if you don't act now, you're going to have financial and legal consequences. That's the bottom line.
Yeah.
There is nothing more. Forget about it. December 31st, 2025. Whether we want it or not, it is here to stay. It's not going nowhere.
Yeah. Plan ahead. We touched on that. You need to get your team together now. I mean, it does for me. If you hired the engineer first and you come to me second with as owner's rep opportunity, great. It can be either way. You can have your owner's rep help you with the engineering component. There's a lot of engineers. There's some really good ones. There's some other ones that I would maybe shy away from. And I would be happy to give you my opinions on that. But get your team together now. Weather factors, it's hurricane season right now. But like Ernesto said, the tsunami's here. And I don't know that we have the luxury anymore of, like, I don't want to start my project during hurricane season. You got 4 months, and if you haven't started, there's going to be some legal ramifications, and it's just going to cost you more down the line. Assess if payment performance bonds are truly required. We talked on that. We talked about the percentage. Explore owner-controlled insurance programs, potential alternatives. I don't know about, what do you think about that, Tyler? I don't know that there are options.
No, I mean, there's not really options. What I'll say from an insurance side is we have a ton of associations that either were delayed in the 40 or 50 year, haven't done it. And a lot of people think it will just affect their property insurance, but it's actually affecting the liability insurance, the umbrella insurance, the directors and officers insurance. So I really don't know what the future is going to look like until everybody gets this done. Because just off, I probably have 80 clients total. I can name 7 to 10 off my head that are 2 to 3 years delayed on their 50-year inspection that have they took a loan, they're taking more money, they're trying to get through some of the contractors that they had, they fired them mid-job, now there's new people coming in, so there's a lot of chaos on the forefront, but it's not just property insurance that's being affected, it's really all the lines of coverage on these associations.
Yeah, I've been asked to bid on some projects where things weren't going so well, and they wanted to get rid of their contract and their contractor. And again, I think, we talked about this at the beginning of the presentation. There's always an underlying theme here is get your team together early and make sure that they're good. They're going to guide you. They're going to save you money. You may not always agree with them, but they're going to give you the information you need, and they're going to empower you to make good decisions. You can't do this by yourself. And if you get a consultant or God forbid, an engineering company that doesn't specialize in this type of work or doesn't have the experience, you're going to be in the same boat as these other people. You're not going to get your stuff done. You're going to end up changing contractors. And even as a GC, if I have a subcontractor that's not performing, and even if I replace him with somebody that's cheaper in the long run, it still costs me more money to get the new guy, because now I have to redesign the scope of work, what's not done, and give it to him. I have to walk the job with him. I have to go to contract with him. There's all these details, and they get really expensive. When you got a $20 million concrete restoration job, when you got to change contractors, it's going to be a lot of money. It's going to be very expensive.
And make sure you can do it too. I have a couple communities that have directors and officers claims for breach of contract because they say, we don't like the work they're doing. We want them out of here. Guess what? You signed a paper that said you're stuck with them. So make sure you read that. You can even see them.
All right. We're running out of time, but I think everybody knows you can't hire an unlicensed contractor for all kinds. Legal, financial risk, no recourse. If you don't have a licensed contractor, you can't turn him into the DBPR because he's not registered with the DBR. You have no recourse there. False economy, initial savings, maybe by this contractor that's not licensed. I think everybody knows that. We're a little bit past that. We talked about the detailed specifications, very important. Clear documentation, minimize the expensive mid-project modifications, change orders. You got to have professional oversight. Again, one more little thing about specifications. Micromanagement without the experts, board overreach. So, again, property managers usually don't have the expertise to manage one of these big concrete restorations, and neither do the board members. And, it's not, as an owner's rep, I like the relationship because I'm the advocate for the board, but you got to let your experts do the work. If you start micromanaging and looking over their shoulders and questioning every little move they make, which you certainly have the right to do, then, it becomes an uncomfortable situation. If you went out and hired the right people, they should be really good at their job and you shouldn't have to do that. Just a little blurb: micromanagement creates delays, contractor frustration, and higher final project costs. Delayed maintenance. I think we learned our lesson with SB 4D. All these communities that delayed maintenance, they voted to waive reserves. They didn't raise their HOA dues. They were more concentrated on what their lobby and landscaping looked than the actual structural items. I think everybody sees everybody's paying the price for that right now because we had a tragedy and now everything has changed. So I think we actually had a slide in here that talked about if it's not helping you comply with the law and it's not related to the structural items or the items that we need to be working on for SB 4D and 154, you're going to have to put those off, especially if you're in a budget crisis. I know how important it is to have your lobby look good. I know how important it is to have your pool area look good and your landscaping. People that live there, they want to see these things. But, I think through town halls and education, you get your membership to understand the importance of these new laws and working on the structural components and, not delaying those or deferring those for other things, that aren't really helping you comply with the law, I think can be a mistake. I've seen it in the past, but I think people are starting to understand that now. So,
yeah. And what about the mortgage companies too, right? Is the mortgage companies with us have been more aggressive than ever on their insurance requirements. What's going to end up happening is a lot of these buildings that don't have the proper insurance or haven't done their milestone inspections and completed it, they're going to get blacklisted by these major lenders like the Freddies and the even our bank is still looking at insurance requirements on all these buildings that we're doing a loan on. Even though the collateral of our loan is the future revenues of the building, they still want to make sure that the insurance is in place. So a lot of these people may go to sell their unit, not be able to unless it's a cash buy or without a mortgage.
Yeah, and then also the assessments are going to be attached to the units for all the work that gets done. Let's see.
We have some questions. I don't know if you're ready for those right now or.
Yeah, shoot.
Okay, so first of all, people want to know if the recording is shareable, if you can share the recording.
Yes.
Okay.
And also be on our YouTube channel, the Overton Network.
Okay, excellent. And then are performance bonds required by statute?
No.
Okay. I think you kind of answered that. Let's go ahead and open it up. If anyone else has some questions for the panel, go ahead and type them in the Q&A or the chat.
Look at that, Paul. You did such a good job. No one asked questions.
That's either a good thing or a bad thing. Well, I'd like to again thank my co-presenters, Ernesto, Cuesta, and Tyler. Really appreciate you being on here and, sharing your valuable insight and your expertise. I'm sure I'll be seeing you in future presentations.
Questions are pouring in, just so you know. You sound like you're wrapping it up, but.
What's that?
Questions are pouring in, so don't.
Okay.
Yeah, the December 31st deadline.
Okay.
You must to have not necessarily the jobs completed, but by the law and the statutes, you are required to have all milestones done, inspections, number one, the reports on the SIRS and all the things that have to be done in the building with an executed contract.
Yep.
That's what the requirement is.
Thank you, Ernesto. And how has tariffs impacted construction inflations post-COVID?
Of course, it has impacted in a way, but there are other elements like inflation and bad board members. I'm sorry, but that is the bottom line. I mean, we have not run accordingly our associations. We have not maintained the buildings accordingly. We have not insured our associations accordingly. All these things have created the perfect storm of where we are today. It's not only one factor, it's many, many factors. And I will say that the major factor are bad associations, bad board members. I'm sorry, but it is the truth.
So just to clarify, 718 and 719 do not require performance bonds. I hope I asked that right.
I'll have to look into 17, 17, 19.
I don't think that there is no statute requiring that bond. I think it's the association as a business person is that to cover yourself. It's like an insurable thing.
Yeah,
which I highly recommend. I do highly recommend.
I thought House Bill 913, which I believe got signed July 1st, said you can have more time for Sears, or is that only if doing repairs for miles?
No, that's only applicable to reserves. That's applicable to reserve, but work to be done, necessarily done at the buildings, properties, they have to have executed contracts by December 31st.
Executed the contract.
Yes, ma'am.
Okay, I must have said that. Good. Corinne said thank you. And then I've got many thanks for their contributions to the panelists. Many thanks for Paul. Excellent slides and presentation. Again, the full presentation will be available, on the YouTube.
Yeah.
Okay, do we want to say the YouTube channel again?
So it's currently Overton Construction Consulting YouTube channel. I'm having it changed to the Overton network, because we're going to be doing a lot of not only webinars, we're going to be doing one every month from starting here, well, last month, moving forward. And we're also going to be doing some live events. So we're changing everything under the Overton network umbrella. So for now, it's under Overton Construction and Consulting, but soon it will be the Overton network. And you'll probably see some advertisements, but we'll put them on there and you can just grab the link and or look at it or grab the link and share it.
Okay, I think that has everyone. Let me make sure I haven't missed anybody.
I think the question about tariffs impacted construction inflation post-COVID. I think with COVID and what we have now is two different things. COVID, the businesses were shut down and you couldn't people weren't making stuff. Okay. You want roofing, waterproofing or waterproofing products. These companies just weren't working, and overseas there was, entire cities shut down. The government wouldn't allow them to go leave their houses. But then you have the Trump, his little mini war with, China, Canada, and these other places. And, he's putting high tariffs on the stuff that and I'm not saying I agree or disagree, but it's certainly these tariffs are not only affecting price, but also it's affecting the supply chain, because if people from other countries know they have to pay high tariffs, maybe they just stop making that product and not send it to the U.S. So it's two different things: the COVID and the tariffs now. Oh, Lori just posted the YouTube channel where you can grab this in the chat section. And Joyce is signing off. Thank you, Joyce. All right. Well, I hope everyone enjoyed. We finished right on time, and we appreciate everyone attending. We're going to be doing a webinar next month with Maureen Reyes, the very famous Maureen Reyes from ACAM Management. We've created a special presentation for them and got it approved by the DBPR for continuing education credits. So you'll see our announcements come out on LinkedIn and through our constant contact, and then through our sponsors. So we hope that you all join us. And until then, have a great day.